Because good having you. Good morning. Thanks so much for joining in. You would be pleased particularly with the events that happened yesterday wherein Sushil Modi has met the finance minister, and in all possibility the deadlock over GST might end and just move ahead.
Yes, indeed, Neeraj. I think GST is one of the most awaited reforms, I would say, which will have a structural impact on our economic growth and I think profile over next many years. And I think we seem to be making progress in right direction. I think earlier in 6-8 months ago, I think there was no visibility of that thing moving through, and I guess now at least there is some hope building that probably we might have GST reality at from 1st April 2013, and if that happens, I think that one event itself can add some reasonably good amount of kicker to our GDP growth numbers, and so we are very happy to see something moving forward on that. And I think even if it may not be a perfect solution to implement with, but I think a progress in that direction would be or some amount of implementation from new financial year would be a great boost to economy, markets and sentiments.
Vikas, so what about the overall market though? While these are potential triggers for the market to scale up higher, the last 2 weeks or so we've sort of gotten into a limbo, just about dragging our feet in a very narrow band.
That always happens, when we had a sharp rally in the market when I think we got some hint that government seems to be moving in the right direction. They are determined to take some actions and all. So I think obviously after such a sharp run, markets have to consolidate, and I think also the ongoing result season, I think market would evaluate how results pan out, and also there's a policy action end of this month. So I think probably market will take fresh clues after these sort of events as they pan out and take a fresh view. So I think always it happens, markets never go one way up, they always take a breather, they consolidate and then move up. So I think broadly the sentiment seems to be fairly positive, and I think the issues such as moving forward on GST, and I think if winter session also goes well, I think we are in for a sort of good time ahead. So according to me, I think overall broadly things are looking reasonably positive, and I am particularly very happy with the banking sector results, because that was one worry point for me, that how the banking sector results will come out, and so far all the private sector banks have delivered reasonably good numbers, and I think that's a good healthy sign, and we need to just see in case of some of the PSU banks and how that pan out. So if earnings seasons pan out, and it is expected that it is likely to pan out well, and I think if we make some beginning of rate cut cycle in the next policy, probably we are heading for a good time ahead.
The big one, Vikas, from the private banking lot is awaited today. ICICI Bank, do you think they could throw up a potential positive surprise?
There is a possibility. I wouldn't want to hazard a guess in terms of what surprise they can throw, but I guess if I were to take any clue from all the private sector banks results which have been declared so far, I think there is definitely while after so many private sector good positive results, the surprise elements again gets factored in to some extent. But I think results are definitely expected to be better, and I don't see at least a negative surprise coming through from this result. So I think let's see, and SBI is the next big one result. I think as and when that comes, we'll have to see what it holds in for, because that's a bellwether in banking sector from PSU perspective.
What's the house call now on some of the private banks, because they've rallied quite a bit from the kind of lows that they were trading at? The likes of mid-sized ones like Yes Bank, or even the larger ones. What's the call now on some of the private banks?
I think we continue to remain positive on the banking sector, and we even like banks from here on, because I think this is if recovery were to set in, this is probably beginning of the cycle or rally, because I think if the interest rate starts coming down, then we will see good time ahead of us, and I think that is likely to last for some time. So we remain positive, and I think some of the banks which were sort of not getting valuations such as Axis Bank or Yes Bank, valuation comparable to their peers, given the concern on the asset quality, probably will be sort of put behind, and I think some of those stocks can get re-rated. So in our opinion, I think banking sector stocks would continue to do well, and I think rate cut cycle augurs well with the banking sector. Even within that NBFCs, I think we remain very positive, because as the rate cut cycle starts, biggest beneficiary in terms of margin expansion would be NBFCs, since their borrowings are largely wholesale. So I think the whole banking sector, BFSI space, I think will continue to remain fairly positive.
Because you've always liked the media space, for a new investor, is there still time to get into a stock and make money there?
Absolutely. Again, as I said, that I think if we ignore the recent run, I think media and entertainment is a large structural story, and I think digitalization is one big catalyst, which is, I think, giving it a second sort of accelerated boost. I think and media, if you see, is again directly linked play with the disposable income. So as we see increase in disposable income, media also gets a reasonably large or disproportionate share of that. So I think and if you have a regulatory environment playing out along with that, that ends up being a lot more complementary. So I think we think that media should be looked at in a structural story, and I think some amount of portfolio allocation should be there, even from a longer term perspective. One can merely, I mean, while recent run up has happened, so it might happen that in next in a medium term stocks might consolidate or might not do well, but I think our view is more from a structural and long term perspective. We continue to remain positive.
Okay, because before we let you go, really, you mentioned banking from the large cap space, which you like. Media is largely a mid cap centric space. What else would be amongst the top calls that you would have, if not from the mid caps, then from the large caps?
See, I think some of the capital goods stocks, I think, will continue to do well, because as the investment activity picks up, you will see investors, there is an appetite. There has been a significant amount of under ownership in that segment, and again there has been a reasonably good shortage of players in that segment, high quality players in that segment. So I think, according to us, after we saw Larsen & Toubro results coming through well and order acquisition happening, I think we will see Larsen doing pretty well, and capital goods as a sector is directly linked to the investment activity coming back. So I think that sector we think will do well. Also another sector which is fairly large, we are very hopeful that will deliver good returns. I think our expectation is that government has to get that right in terms of power. I'm referring to the power sector. I think once we get some amount of clarity on the coal issue, which we understand that is in works. So if that happens, I think probably power sector could be one sector which could give good returns in medium term from here on.